What is a high-yield savings account and how does it work? A high-yield savings account could be a great tool for growing your money. It might offer a higher interest rate than other savings accounts, and it's more liquid than many higher-risk investment options. Here's how it could help you earn a better return. So, first of all, what is a high-yield savings account? Simply put, a high-yield savings account is a savings account offering a higher rate of return than a standard savings account. In fact, the annual percentage yield, or APY, can be 10 to 12 times higher than a traditional savings account. But it's usually a variable rate, so it could go up and down with economic conditions. Online-only banks may offer higher APYs because they don't have the overhead that brick-and-mortar financial institutions do. But every bank can set its own rates, so it's best to shop around. So then, how do high-yield savings accounts work? Most high-yield savings accounts pay compound interest, which earns you interest on the interest as well as the principal deposit. They can compound daily, monthly, yearly, or other regular intervals. And more frequent compounding grows your money faster. You generally don't face penalties if you wish to withdraw your funds, but it may require a larger minimum deposit or ongoing minimum balance. And you'll net the highest return if you leave your money and regularly deposit more. In fact, a great strategy is to have a portion of your paycheck automatically transferred. Now, here's what to look for in a high-yield savings account. First is the interest rate, reflected in the advertised APY. The higher, the better. But it also could be a limited-time promotional rate. Next is any minimum initial deposit or ongoing balance requirements. Either one could range from no minimum to tens of thousands of dollars. Of course, there might be maintenance fees, overdraft fees, and ATM fees, but you may have the option to avoid fees by meeting certain criteria. Finally, check for rules around accessing your money, whether that's withdrawing cash from an ATM or making transfers to other accounts. Let's look at the benefits of high-yield savings accounts. You can use these accounts to reach many types of goals, including creating an emergency fund, saving up for a car, home, or life event, planning a renovation or landscaping project, starting a college or vacation fund, financing a passion or business, or storing your funds between investments. In fact, high-yield savings accounts are some of the most liquid and flexible financial products available because they let you grow your money passively while still having access to it when needed. So here's the bottom line. A high-yield savings account lets you make a return on your money without taking it out of commission. So it can be a great tool to safely grow your money without worrying about high risk. But you need to consider all the parameters, including whether you can meet the minimum requirements, or if you might be able to get a higher rate of return somewhere else.